How 21st century is that?
I tell you,
Donna Felcher.
that's amazing. You do it all, don't you, John? I mean, everything.
Yeah.
Oh, like you're a juggler.
Well, no, from time to time I do two things at once.
All right.
Not like you, Nona Peltier, sitting here with 411 pages in front of you.
That's true. I do. I have a lot of pages here. Well, there's a lot to talk about.
I want to say, Nona, because this is our last business chat of the year because Giles is on next week, what a pleasure it is having you in the studio, making business three-dimensional, interesting, human. Fantastic. Whenever you're with us, it's a joy. Nona,
oh,
thank
that's such a lovely thing to say.
you. Right, how are we going to end the year? What are we talking about?
Well, we're going to talk about oil and gas. Why not? I mean, we've been talking about oil and gas most of the year, so let's just talk about it now. And that's because today there was a special shareholder meeting in Wellington. New Zealand Oil and Gas asked their shareholders whether or not they would approve that deal where they're selling the Kupe field to Genesis Energy. And Genesis was offering quite a good price, 168 million, I believe, from memory. Yeah, that's right. A big, huge number.
Yeah, that's a lot of money.
And more than the value is to New Zealand Oil and Gas as a stake onto themselves. So Genesis owning a larger share of that field is worth more to Genesis, so they paid a premium. And the shareholders took out the offer, and while for Christmas, guess what? Well, not for Christmas, but in their stocking coming up by May is going to be $100 million in cash back to shareholders.
So what did the New Zealand Oil and Gas share price do today?
Actually, not very much,
right.
Because it was fully priced in.
Okay.
It was kind of assumed that they would take it. So what happened was the share price only rose, actually 3%, but that's only 2 cents to 63 cents a share. Now, it's interesting because one of our leading analysts in New Zealand, Forsyth Barr, was very quick to sort of evaluate the deal and see where it sits. And they're saying, well, you know what? New Zealand and oil and gas would be worth more per share. They say it would be worth somewhat like 76 cents a share if they just cashed up the whole lot. Yeah, as opposed to keeping it. They said that if they kept it, it would only be worth 66 cents.
Right, so basically if they liquefied themselves.
Yes, that's right. And just put the cash all together and liquidated their company, it'd be worth more a share.
They've been constantly involved in a process of reinvention for decades now, New Zealand Oil and Gas. So a really interesting company. They were significant shareholders, lest we forget, in Pike River. And we all know what a disaster that investment was, and lots of questions about shortcuts and cutting corners and
interestingly though, I spoke with their new chief executive who was confirmed today. That's Andrew Jeffries. Interesting. We've talked to him a few times recently over a number of different issues, and they're looking to take the money that they have in the bank and buy fresh assets and go again. They're quite confident that oil prices are going to recover and that the assets right now, there's a lot of them in New Zealand. So for example, both Shell and Origin Energy are looking to sell up their portfolios. They're thinking, well, we've got loads of cash. Yeah. Let's go shopping. Yeah. So and he said that they expected to make some good deals within a year. So let's wait and see. But I don't think there's any appetite for New Zealand Oil and Gas to liquidate all their assets like Forsyth Barr was suggesting. So yeah, it'll be a really interesting year for New Zealand Oil and Gas. Gas prices, oil prices generally have improved a bit since the OPEC and non-OPEC nations came up with some kind of deal. However, there's still a glut of oil out there. So now the whole conversation turns to Donald Trump. What's he going to do?
Let's talk about the year, because I think for me, listening to you speak during the year, it was how often the markets were confounded by democracy, whether we liked the democracy or not. And the two classic examples, of course, were Brexit and Donald Trump. And so the market, and you were just talking about the fact the market constantly prices in expectations. It tries to know in advance what's going to happen and price things accordingly. It got Brexit so wrong that it ambushed itself.
Well, I think it was the bookies that got it wrong.
Yeah.
I think the punters, in fact, the poll showed right up until the end that it was very, very close and that the margin of error pointed could go either way. It's just that, some people with big pockets put bets on the opposite, on what wasn't the winner.
Absolutely.
So some people took a big bath there, didn't they?
And through all of this, New Zealand has remained. What did David Longy, call the New Zealand reef fish? And little bits of driftwood tossed around on big seas. Yeah. But we've remained reasonably steady.
And even now, our dollar, it fell a bit after the U.S. Federal Reserve hiked interest rates this week. After it took a whole year for them to get to that. Anyway, so the New Zealand dollar was, what, 72 cents at the beginning of the week? Now it's 70.3, which is pretty good because the U.S. dollar is at a 14-year high. And, it probably will stay there because of the inflation pressures. And we're looking at an interest rate hike of maybe 3% by 2019. Anyway, that will be enough, I'm sure, to keep the market happy.
Yeah, it will.
So what do we got? 70.3 US cents, 95.4 Australian, 56.6 pence. That was where our dollar ended the week. And our top 50 index was really little changed. Some of the emerging markets in Asia have taken a bit of a hiding with the shift of the dollars back into the U.S. economy there. So we ended up 12 points, not very much, to 6,760.
Thanks, Nona. Congratulations on a fantastic year.
And
It's a
you,
pleasure
John.
working with you. Happy Christmas.
Oh, thank you, and you too, and
Thanks.
everybody and all our listeners as well.
Thank you, Nona.